Welcome back to investingnews.com. We're speaking with Mark Reilly from IODM Limited. Welcome, Mark.
Morning, John. Thanks for the opportunity to be here.
First of all, for investors new to the company, how is revenue generated?
John, our main revenue model centres around what we call a revenue share model, whereby when we launch our product into universities across the globe, the product is offered to the university free of charge, and we take a share of our payment company partners' revenue. In this instance, Convera, who charge a transaction fee on a foreign exchange transaction for students where they pay their invoices, foreign students paying their invoices to study in the UK in this example. So we take 30% of Convera's foreign exchange revenue, and the university gets the benefit of the IODM Connect platform for nothing.
As total revenue grows, how does this therefore impact margins?
Yeah, look, obviously, as our footprint in the UK grows and our revenue grows, we will start to experience economies of scale. Through the revenue share model as it is, our costs don't escalate as such because at the end of the day, we are servicing Convera's clients or other payment companies' clients, and therefore we don't necessarily need an independent sales force of our own. We're using those organisations' own sales or account management staff. So, the margins will get tighter as our revenue grows, and we'll see that operating leverage start to kick in, whereby our costs are relatively stable as our revenue grows quite significantly.
With the current expansion in the UK, what % of the addressable market do you control?
Look, at the moment, we've been building up in the UK for about just over 2 years. The total addressable market, we think, for IODM is about $50 million a year. We're probably, on track to be at about 10% of that at the moment.
Going forward, where's the client acquisition process focused?
At the moment, we've strongly focused on education. In the UK, we have a number of universities already utilising the services of the IODM Connect platform. We've just launched in North America with Convera again and with another payments company, TransferMate. So we're looking to build the education model that we've built up in the UK. We're looking to replicate that in North America. But this platform is easily scalable to other verticals, such as the healthcare space in North America, which is one area we'd be looking to get into as we build our scale in education in the UK and the US. And once we secure our foothold in the US in education, we'd be looking to build that same model out into other verticals.
With you scaling the business therefore, Mark, would you consider potential acquisitions?
Look, possibly. At the moment, our mantra, if you like, is to grow the revenue as quickly as possible, and build up that continual revenue base. But having said that, anything's always on the table. If we came across an opportunity that we deemed was value accretive to shareholders and was aligned to our current revenue program and where we see ourselves in the marketplace, then of course that's something we'd always look at.
Finally, Mark, for investors, what are the key catalysts for the remainder of the year?
Look, the key catalysts are we've demonstrated for the first quarter of this year that our revenue growth in the UK has gone up significantly month on month, on a year-by-year basis for July, August, September. We've disclosed to the market that those figures are up considerably, on an average of about 200% year on year. As we move into what is traditionally our larger quarters, we'd be looking to see if those results are replicating the previous quarter results. And in the event they do, look, John, I think the key thing to think is that we'll go perilously close, if those numbers are replicated, to probably achieving our short-term goal of being cash flow positive for the December quarter.
Thank you very much, Mark, for updating investors today. We look forward to chatting to you again soon.
Pleasure. Thanks, John.